Okay, today we're here with Danica D'Souza, and we're going to talk about the new mortgage changes that are taking effect January 1. How are you?
Vince, I'm well. Thank you so much for coming.
So tell us a little bit about yourself. You work with Big City Financial. How long and what it is you do?
Well, I've been with Mortgage Architects for many years. It'll be 10 years coming up in December. Big City Financial is a franchise of Mortgage Architects, and we've been franchised for approximately 9-10 months now. I've been with the company for 10 years and grown, and it's been a really great experience.
So you're a rock star mortgage broker. Her phone is in front of me, blowing up as we speak. True story.
I'll answer that call later.
Yeah. So tell us a little bit about the general rule changes that are taking effect January 1, which is right around the corner. And just let us know some of the information.
Well, the big change for the general public is that you have to qualify now for a mortgage at a 4.99, which is the current qualifying rate offered by the government and the OSFI and whatnot. If you're doing a conventional mortgage, so if you're putting 20% down of the purchase price, if you're still putting less than 20% down, it's considered a high ratio mortgage, and you still have to just qualify at the 4.99 qualifying rate, benchmark rate. Coming up in January, you will have to qualify at whatever the current rate that is being offered, which in around the 3.44% plus 2%. Which is kind of what I feel is getting in the way of a lot of people being able to purchase a home now.
Okay, so just to recap, I think right now for high ratio mortgages, 5% down, we're already doing this.
Yes,
so
that was October of last year.
Yeah, so in layman's terms, basically we're taking that and now it's going to apply to conventional 20% down buyers.
That's
okay.
Right.
So let's go over this quick example. And then we'll take a look at some options that people might have. So
Absolutely.
What you're saying here is now a household income. We went with more of a
Moderate.
moderate typical situation. So we've got a household income of $74,000 and a down payment of $100,000, which would be a maximum conventional mortgage at $399,880. So basically $400,000. For a purchase price of just under $500,000, and that's a qualifying rate of 3.39%. So as of January 1, we add that 2%, and then we have this.
Same $74,000 household income, a same down payment of $100,000. Now the conventional mortgage amount is still that same, roughly about $326,000. The purchase price is just a little bit less because now the qualifying rate is higher. So a lot of the economists and whatnot have said that the average Canadian is going to decrease their purchasing power by about 25%, but it still alleviates the financial stress of the general public, I'd say, having this crazy mortgage amount and these crazy mortgage rates, and now your payment is significantly higher as well, which could cause a lot of stress, especially with the downturn in the economy and the fact that the Canadians they have a heavy mortgage load right now.
Mother of four. Of course she's worried, and she's talking about the pros and cons, right? And you're talking about how the government is implementing this in order to prevent families or individuals from being house poor, basically.
House poor, bankruptcy,
right? They lose
fact
a job,
that losing their houses, things like that.
Okay.
Because
So,
that happened in the past, and we're trying to prevent that for the future.
For sure. So ultimately, we're talking about a change in purchase price by $73,000, which is significant.
Very much so.
Right, so it might push, a step-up home buyer to move more laterally, for example, or a first-time home buyer with 20% down instead of getting a $500,000 home. They might have to look at an attached,
single-family home, something a little bit smaller.
Okay.
Right?
So I have a question for you. If someone out there is watching this and they want to jump in on the market before this takes into effect, is there any kind of rate hold or something that they could lock into now that will hold them into the new year? How does that work?
Absolutely. So a lot of our lenders have the 120-day rate guarantee. So we can hold this rate, in 2.99, we'll say, for example, we can hold that rate for 120 days. If you purchase the house on December 20th, Merry Christmas, and then all of a sudden you don't take possession until late February, just because that makes the most sense for everyone involved, then that's also an option for you.
So it has to be purchased
Prior to.
before January 1?
That's right.
Okay, so they can't hold the rate and then make the purchase in January 13th?
No, because
Okay.
doing the actual purchase sets everything in stone for you.
Okay,
And then, we can get all the requirements done between December 1st or December 20th, as an example, and a couple weeks into the new year.
so what you're saying is, for everybody out there, they need to call you, get pre-approved
Pretty
today,
much, yes.
right now, and then call me and let's go shopping.
Let's go shopping.
Okay, okay, and so people might be asking, are there ways around this? Like, is this a conventional bank thing? Are there ways, what are we looking at, really?
There's a couple of different ways, and we don't know if rules are going to change even more coming weeks. We have no idea. We assume not, but you just never know. Right now, we can actually, when you have a conventional mortgage, we can do a 30-year amortization. It does make your payments a little bit smaller, so it allows you to qualify for a little bit more. So that's also a benefit. We just don't know how long it's going to last for, if it's going to be an option in the future or not.
There you have it. So January 1, we have some big changes going on. If you're looking to buy, now's a great time. We just mentioned. We'll provide Danika's information down below. Give her a call, get pre-approved, and let's go shopping.
Absolutely.
Until next time, now more than ever, who you work with really, really matters.
Absolutely.
For sure.